Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is July 14th edition of Market Outlook. So markets certainly came back with a roar once Bernanke cleared up the fact that rates weren't going to jump immediately. The cat's still out of the bag, and net looks like the market is adjusting to the fact that there are going to be higher rates. There are higher rates. In fact, we've had one of the biggest rises in rates in over 50 years in the last couple of weeks. So let's get into what the spiders look like, the S&P 500. Well, as you can see, we are a bit overbought here on the short-term RSI. On this rally here, another thing to take note, it is a summer rally, but it's extremely light volume. So I don't know how much participation is occurring with the big institutions because of this volume factor here. Another point here is we did make new closing highs. Not new all-time high, but new closing highs. Friday's closing bar was sort of a pause. Not quite a doji day where it's open and closed exactly in the same area, but we did get a new high all-time close, albeit with not much upside progress, but nonetheless it did hold up. So looking at the overall chart here, a little bit overbought, right? And still a great new closing high. So we want to see what this price action occurs here. This lack of volume is of concern. The biggest volume that occurred was, of course, on this down move. But we really haven't had much of a true accumulation day where at least we're above the moving average of volume over the last 50 days. That has not occurred. The only time that has occurred, higher volume, has been on the declines. So a little bit cause of concern there. Let's take a look at the weekly chart. In terms of the weekly chart, we have this channel line here, which has been adhered to pretty well. Upside channel occurs around the 172 level, so you want to be cognizant on any continued follow through that you're going to start seeing some resistance up at this upper region here. Now, another thing to note, 156 level, this is a critical support level. So that defines your trading range. A close under 156 in the S&P would indicate a potential topping formation, but for now we've got a sharply rising moving average to the upside on the fast moving average. That's the 65 week, and that's well intact and sloping up. That's very positive for the market. Let's move to the market internals. You can see the McClellan oscillator in upper region. We hooked down on Friday, but nonetheless we are still in a positive zone. We need to see the McClellan oscillator, which gives you a read on the market 2 to 3 weeks out, or for 2 to 3 weeks, under 150. In the interim, the market can continue to work higher just because it's up in this region. It is running rich, but it can certainly run richer, and it's been as high as about 300, and we're running about 188 right now in terms of the McClellan oscillator. On a shorter term basis, similar scenario. We are in pretty rich territory both for the 10-day advanced decline as well as the up-down volume, and we hook down. Now, we can hook down, and what we really need to do is see both of these cross under their key reference points here, which is 60 for up-down volume ratio, 2000 for the advanced declines. We're nowhere near that, but we're going to watch it because that would generate a pretty bona fide signal. And what's interesting is you have it both on a shorter term basis and potentially on the McClellan oscillator. So are we running rich? Yes. Are we on a sell signal? Absolutely not. So there you have it. Running rich, waiting for the next, you got to follow the move up, but obviously, if this market starts to sell off and these indicators start moving down, that would definitely be a bona fide sell signal and potential short-term top in the market, considering how overbought we are right at the highs. So again, read the tape, let the market tell us what to do. In the interim, trend is intact. Taking a look at sentiment. Sentiment, you have a similar scenario. We're back under the 200-day moving average. It's a little suspect, not quite the same situation we had before, is where the 50-day moving average is now above the 200. So sort of a what I would call, certainly this week you move back into bullish territory, but not quite as bullish as it was before the sell-off occurred. So a couple potential chinks in the armor, as you can see, forming, but nonetheless, still things are intact. Are we running a little rich on sentiment? Yes. The volatility has really come in hard from the recent peak around 20, trading in that 1385 to 14 level, and over a bit overdone. So another cause for caution based on the market internals. Let's take a look at bonds. Bonds on the weekly chart, you can see the 200-week moving average. This is a critical support level. We're bouncing off of that, and you got pretty oversold. So it's possible that rates, at least for now, have run its course, and it's going to need to digest this obviously monster move up in rates, and as a consequence, the bonds have moved down. Right now, looking on the daily chart, you can see we have some really good resistance, which coincides with a sharply declining 50, all the way up to 113, 180 to 114 in the TLTs, and it would also coincide with some very significant resistance. So are we wrung out a little bit? Potentially, yes. We could work our ways sideways for a while. If there is a rally that's going to materialize, it looks like certainly that 114 level is going to be formidable resistance. Gold, most interesting formation. We have here a legitimate island bottom. You don't see them as well defined, and over such a long period of time, which is, over the last several weeks, the gap up on Thursday and Friday, really interesting. Left all of this activity down here and this blow-off bottom. Now, we were pretty convinced we had a tradable bottom here. As you can see, the 80 monthly on gold, a critical moving average, has held like a rock. In addition, you were well oversold on both the monthly, the weekly, and on the daily, along with a classic slingshot pattern here. This is a glass bottom pattern, coincides with a bullish engulfing pattern. We had our biggest percentage move since 2011 from gold, from the lows to the close on Friday. So that's pretty good. I think you got a move at least up to the 130 level, maybe a little bit more, and then we'll see what gold is made out of. But in the interim, this potential bottom formation, along with that climax volume pattern here, as you can see, we had well over double the volume on that massive sell-off and key reversal or slingshot pattern right here. So we continue to hold our position. If you want to follow us, please sign up for Mish's Market Minute. That is our swing to mini swing slash position trading product, and we'll tell you and tweet you as it unfolds. This trade is of most interesting. Anyway, let's take a look at Germany. Germany is probably the second best performing country fund index. This week we took notice of it as it crossed back over its rising 200-day moving average. On the confirmation of the second day, we got in, and of course we've got a nice profit here, looking to see if we can really get into a bullish phase, or that's all she wrote. So meanwhile, we've got a no loss stop in here, looking to see what the market tells us next. a little bit concerned. We got a little bit overbought as we approached the 50-day moving average on the daily, and we lightened up some on that particular drive up. So on the monthly chart, taking a look at the EWG on the monthly, again, holding the key longer term moving average and bouncing off of it. So Germany seems to be coming up strong compared to other world markets. Egypt seems to like the new military regime. A little bit of stability came in. Another island bottom. Looks like we're flagging right here. The market seems to be taking the news of the overthrow of the Muslim Brotherhood with a great relief and cheer. So we're going to keep an eye on this this bottom and also this potential short-term flag forming here. Stay tuned. This is certainly a most interesting market to trade, with it being so volatile, news-driven, but it's also a great indication of world political events and how that impacts the markets and how markets react to all different types of news. Lots to be learned from observing how this chart unfolds relative to the political developments. Okay, so that covers it for now. Look forward to seeing you next week. Don't forget, go to the website, marketgauge.com, sign up for this free newsletter, and if you really want to follow us through these trades, sign up for Mish's Market Minute Premium, and or if you're more inclined for active trading, we have a day trading room as well. Thanks, and bye for now.